With litigation concerns surrounding the business, 3M stock price has fallen quite dramatically in the last 5 years. The company trades just above its 52-week lows. Will these lawsuits cripple the business, or have these fears been overblown? We're analyzing 3M, stock ticker MMM, to see if its stock price is a fair value. We're using the Select 6 analysis to look at the most telling financial metrics before estimating an intrinsic value for 3M. Then we're giving a final rating to the business. We'll cover key ground about their lawsuits along the way that just might be the tipping point when analyzing 3M for your portfolio. Before we get into these valuable metrics, let's understand 3M stock performance. Right now, 3M trades for $99.90 per share. Year to date, their stock price is down 18.5%. In the last 3 years, their stock price is down 37%. In the last 10 years, their stock price is down 13%. Going back prior to the global financial crisis, 3M stock price is up 17.5% overall. Their stock price is compounding at under 1% annually. However, 3M is a dividend king. Currently, they have a huge nearly 6% dividend yield. 3M has raised its dividend payouts for 60 years in a row. They paid out dividends for more than 100 years. They have a very strong dividend track record. Their dividend yield throughout this time is in addition to these returns, but are their dividends potentially at risk? As mentioned, 3M currently trades $7 above their 52-week low. The company's down more than $50 from their 52-week high. 2.5% of their shares are sold short. 3M is a large business. They have a $55 billion market cap. But the burning question is, what's 3M's business and what do these lawsuits have to do with it? 3M is a multinational conglomerate that has operated since 1902 when it was known as Minnesota Mining and Manufacturing. The company is well known for its research and development laboratory, and it leverages its science and technology across multiple product categories. 3M is organized into 4 business segments: safety and industrial, transportation and electronics, healthcare, and consumer. Nearly 50% of the company's revenue comes from outside of the Americas, with the safety and industrial segment constituting a majority of net sales. Many of the company's 60,000 plus products touch and concern a variety of customers and end markets. 3M currently faces multiple lawsuits. One is related to PFAS pollution, which the business is in talks around at least a $10 billion settlement for. The company's also facing lawsuits around its earplugs in a contract that it sold to the US military. Just recently, a judge rejected the bankruptcy filing for that subsidiary of 3M responsible for those earplugs. This follows a similar rejection for Johnson & Johnson for some of the talc powder lawsuits they're facing. However, in this case, 3M subsidiary was an actual business and had both assets and liabilities prior to the bankruptcy filing. This is something that likely needs to be reviewed again, but it is something weighing on the business. With our overview of 3M and their legal concerns, let's look at their numbers. Starting with metric number 1, we want their average return on capital in the last 5 years to be above 14%. Over the long run, over the course of decades, a stock's likely to return what its underlying business returns. These business returns are captured by return on capital. The average business earns about a 7% return on capital, so looking for a benchmark that's double this allows us to build in some margin of safety. 3M's returns on capital have declined throughout this time. Even with these declines, they're still well above average. In their most recent fiscal year, they earned about 17% returns on capital. Averaged out over this time in a given year, 3M earns about 22.5% returns on capital. These returns are nearly 3 times better than a typical business. This is a check on metric number 1, as 3M earns high returns on reinvestment. Metric number 2, we're looking for growth. We want to see growth across the board for their revenues, net incomes, and free cash flows. All 3 of these need to be up for this to be a check. We'll also include their last 12 months worth of numbers in our calculations. During this time, 3M's revenues have grown very slightly, up just 2%. Their earnings have also increased by 2%. However, their free cash flows are down. They've dropped from $4.8 billion in 2018 to around $4 billion today. Because of this decline, this is an X on metric number 2. Metric number 3, we're taking the perspective of an individual shareholder in 3M by looking at their earnings per share. We want to see growth in the last 5 years. Their earnings are slightly up by 2%. We still want to look at their shares outstanding to see what the company has done on that front. During this time, 3M has bought back 6.5% of their shares. If you've been a 3M shareholder, they've increased your ownership percentage of the business without you having to spend a dime. However, it's likely that many of these share buybacks were occurring at much higher than today's market prices. You'll want to see if management's capital allocation was truly creating value for shareholders. Because of their increase in their earnings and their small share buybacks, this is a check on metric number 3. Metric number 4, we're looking for free cash flow per share growth in the last 5 years. While 3M has had these buybacks, these are going to be outpaced by their declines in their free cash flows, meaning their free cash flows per share are down over this time. This is an X on metric number 4. So far, through our first 4 metrics, we're split evenly. We have 2 checks and 2 X's for 3M. During economic downturns, it's overly levered businesses that are likely at the greatest risk of poor outcomes. We're looking at how 3M uses debt. We want their net debt, which is their total debt minus their cash and their short-term investments, to be below the amount of free cash flow 3M has produced in their last 5 years. Right now, 3M has around $13 billion of net debt. In this time, when we add up their free cash flows, they produced about $26.5 billion worth. That's nearly double their net debt position. This is a big check on metric number 5, as 3M looks like it's strongly cash flow generative, even with these recent declines, and is able to support their net debt position. Before we get to a valuation of 3M, it's time for our bonus. As our bonus, we're looking at 3M's dividend profile. As mentioned, 3M is a dividend king. 3M has raised its dividend payouts for 60 years in a row. They paid out dividends for more than 100 years, and they're paying a 6% dividend yield, which is way above the dividend yield you'd get from an S&P 500 ETF. This means 3M has both a high dividend and a strong dividend track record. We're looking to see if their dividend looks safe or not. For 3M, we want their dividends to be supported by their free cash flows. That's been the case in all 5 of these years. However, the company's recent dividend payout ratio was very, very high. 3M paid out the majority of their free cash flows as dividends in their most recent fiscal year. While they had paid a large percentage in previous years, it was nowhere near as close. 3M's balance sheet does look healthy compared to its free cash flow production, but the majority of this is currently going to their dividends, meaning it's possible their increases in their dividend could be under some pressure. This is a snapshot of their last 5 years of performance, and it's no guarantee for the future, but that's something to keep an eye on, as ideally you'd want the company's free cash flows to rebound and have a lower payout ratio. It would offer 3M a lot more flexibility for how they spend their cash flows. The big metric of them all, metric number 6, we want 3M's average 5-year free cash flow to their total enterprise value to give us a yield that's above 5%. If this is the case, this offers a slight risk premium to the yield of the 10-year treasury. It's the first of 2 different ways we'll try to figure out a fair value for 3M. Right now, 3M's total enterprise value is $68 billion. This is looking at both their market cap and their net debt position. It offers a perspective of 3M similar to it being a private company. In the last 5 years, we learned 3M produced $26.5 billion worth of free cash flow, meaning in an average year, they produce about $5.3 billion of free cash flow. When that's divided by their $68 billion enterprise value, we get about a 7.7% average free cash flow to enterprise value yield. On a current basis, 3M produced $4 billion of free cash flow in their last 12 months. When that's divided by their enterprise value, we get about a 5.8% current free cash flow to enterprise value yield. Both of those are coming in above the yield of the 10-year treasury and above the slight risk premium we'd be seeking, meaning this is a check here on metric number 6. But don't just run out and go buy the business. This is not financial advice, and we need to come to a more concrete estimate of a per share value for 3M. Everything we've discussed so far is important, but there's something missing that in my opinion is the main reason to analyze 3M, which takes us on to using a discounted cash flow model to come to an estimate of their fair value per share. A DCF model is based off the predictability of a company's free cash flows. Like any model in any discipline, its outputs are sensitive to its inputs. We're starting with an average of 3M's free cash flows in their last 3 fiscal years. Then we're using historical assumptions to grow these into the future. It's up to you to figure out if these assumptions are accurate or not. Assuming the company grows their average 3-year free cash flows at a rate of 5% annually for the next decade, then assuming these cash flows grow at 4% for the following decade, if we add in the company's tangible book value, which gives an estimate of their net worth, and if we're seeking a 15% rate of return, which is the rate of return Warren Buffett's looking for in addition to his margin of safety requirements. At today's valuations, it looks like an estimate of 3M's fair value is around $77.50 per share. That's down about $22 from the company's current stock price. It looks like there wouldn't be a margin of safety in the business. It's worth noting 3M has been a moderately predictable business in its past. However, that's not a guarantee for the future, especially considering some of this litigation. Please be mindful this discount rate is an estimate of total returns to shareholders, 6% of which are currently coming from their dividend yield. Also, this tangible book value could be different from what the company's net worth is in reality due to how the accounting is done for their share buybacks. Most importantly, this analysis is not financial advice. It's not a buy or sell recommendation of any security. Consult with a financial advisor before making any investment decision. In just a moment, we'll give our final rating to 3M. But we have to address something first. We focused a lot on the quantitative by covering the numbers, but the qualitative aspects of 3M are just as important. Starting with the qualitative factors supporting a potential long thesis. Number 1, 3M is likely to profit from repositioning its portfolio to faster growing portions of global GDP, which over the long term should allow it to handily outperform the Industrial Products Index. Number 2, the firm continues to benefit from its shared technology platforms, which are applicable to multiple use cases. Technology allows 3M to charge a 10 to 30% premium for its products, but also brings down its unit costs. Number 3, 3M continues to emphasize innovation and keeps competitors away with generous levels of R&D spending, which typically totals nearly 6% of net sales. This wouldn't be complete without looking at the factors supporting a potential short thesis. Number 1, as we've covered, litigation risk could cripple the value of the company and remove any benefit from potential future catalysts. Number 2, the firm faces several challenges, including slower respirator sales that represent an approximate $500 million headwind for sales in 2023. Number 3, while 3M has earned returns that have doubled its cost of capital for over 25 years prior to the pandemic, gross profits over prior year R&D spending have started to slow down. There you have it for a balanced perspective of some of the qualitative aspects of 3M. Now it's time for a final rating. In analyzing 3M, stock ticker MMM, we learned the company earns good average returns on capital. Their revenues and earnings have just crawled up in the last 5 years, but their free cash flows are down. They bought back a little over 6.5% of their shares. Even with declines in their free cash flows, it looks like they can support their debt position. However, the majority of their free cash flows right now are being used to support their dividend payouts of more than a century. They've increased that dividend for 60 years, but that could potentially be at risk. The company potentially looked attractive based on those free cash flow to enterprise value yields. It's worth reiterating that this is not financial advice. However, when we performed our discounted cash flow analysis, using those assumptions, if we wanted that 15% return, and at today's valuations, it looks like an estimate of their fair value per share is around $77.50. 3M was last at those levels more than a decade ago, back in October of 2011. That would be quite the difference from where the company historically has traded at. Also, the company's pending lawsuits are something that you really want to pay attention to and understand in more detail as you're researching 3M. Looking at all the factors in our analysis, 3M looks like a weak candidate for further research. Don't let that discourage you if you're interested in 3M. This is not a buy or sell recommendation of any security. Consult with your financial advisor before making any investment decision. If you enjoyed today's video, be sure to like the video, subscribe to the channel for more stock analysis videos, and share what business you want me to look at next in the comments below. Thank you for learning about 3M with me, and have a great day.